All right, hello. Welcome to July 11th, 2024 trade recap today. So today was CPI day, and we had news release at 8:30 EST, which is about 7:30 my time. So let's dive right into these charts here now, huh? Let me get my stuff ready. Okay. So the first thing I noticed coming into today was even before the news release, right? So just based on this daily candle here, I can anticipate for prices. Oh, shoot. Okay, so I can anticipate for prices to take out previous day high here, just from the way this daily candle closed. So what I am anticipating for us to do is to take the daily high first, and then if we expand from there, then we expand from there from CPI, or we retrace back inside the range. So when CPI did hit, right, or when CPI dropped, we took out previous day high, and notice how this hourly candle closed here. So we had a bearish hourly candle close. So from this hourly close right here, this to me is a liquidity sweep from previous day high. And notice how after taking out previous day high, notice the displacement back inside this range. So that displacement right here is foretelling that we are going to retrace into this daily fair value gap, noted right here. And like I said, this liquidity, this July 8th low or fair value gap high was the objective. So based on that, I formulated my idea, or sorry about that. I came up with the idea that, hey, we're probably gonna go retrace into this this daily fair value gap and rebalance it. So on the lower time frames, I looked, and this is where I actually took an entry. So so we took out previous day low as well, previous day low being here, and notice how this 15-minute candle closed. So we had this bearish 15-minute candle close. Also in confluence, we also had this 30-minute closure. So based on this 30-minute candle close, what can we anticipate? I can anticipate for us to take out this 30-minute low. So I go onto the 15-minute time frame, and this 15-minute candle also has the same objective. So its low is the same as the 30-minute low. So in my head, okay, I'm thinking, okay, we're gonna take this 15-minute low and 30-minute low, just based on their power of 3. And why I anticipated for prices to treat this fair value gap right here, this 15-minute fair value gap, as a breakaway gap. So let me note that out. So I treat this 15-minute fair value gap as a breakaway gap. So on this very next candle here, on this very next 15-minute candle here, I don't anticipate for prices to open here and retrace into that 15-minute fair value gap. I am anticipating for prices to open this next 15-minute candle, and create the high, and then create the low, possibly attacking the July 9th low and July 8th low, and then create the close. So that was my anticipation for the next 15-minute candle, and this was live, all on stream. I wasn't able to do a trade execution because I was streaming, so there's really no need to record the execution. It is on my live stream. And I explained why this 15-minute fair value gap is a breakaway gap in my fair value gap theory video. You can check that out there. So I go onto the lower time frames, right, to see if there's any ideas, or not ideas, but fair value gaps or PD arrays that supports the idea of us taking out that 15-minute and 30-minute low. So Now I go on to the 5-minute time frame and I notice, oh, okay, we have this 5-minute fair value gap that prices could, return into or retrace into, and continue lower from there. So like I said, the lower time frame draw is lower, and notice how on the lower time, or on the hourly time frame and the higher time frames, I am anticipating lower prices here too. So I'm anticipating for us to draw into that July 8th low and July 9th low. So we haven't taken them out yet. So whenever we retrace back inside that 5-minute FEG, I take an entry here, and my stop loss is placed, I believe it was right here. It was at the open of that candle, and I'm targeting, July 9th low and July 8th low. So that is about like 120 points. I don't know how much that is tick wise, but yeah. So that's the trade. I go into the 1-minute time frame, right? And I note out the 10:30 open. So if you apply power of 3 to every single candle, that means you wanna understand and know where every single open is for every candle that you're basing your trade off of. So I based my trade off of the 30-minute time frame and the 15-minute time frame. So I take the 10:30 open, and I always want to be selling above. You want to sell above the opening price, is what ICT states, right? So that 5-minute FEG here is actually above the opening price. So when prices opens up into it and taps into the 5-minute FEG, I take my entry, and I have these standard deviations here just so I can project how far or how low prices could go. And here, this is what happened. We kind of millie around here, and I did actually take out full partials or full entry, or I took off my entire size, or I turned off the whole trade at the July 9th low. So after we take out July 9th low, I just terminated my trade. It was over. The reason being is, on the dollar index, we actually dropped off like significantly, and that to me was not, I did not like that. And if we dropped off on the dollar, we should be seeing higher prices on the indices, but we weren't. So that made me a little bit skeptical about what was occurring. All right, so here, that was a, like I said, it was like around like 190 tick trade. I do want to point out, look at how prices reacts to the consequent encroachment of that 5-minute fair value gap. Whenever I saw prices respect this 5-minute fair value gap like that, and we traded lower, this to me, I was like, oh yeah, we're going to attack this 15 and 30-minute low and the July 9th low. So this trade is a expansion trade, because it's, like I said, it's based on the higher time frames, targeting the July 8th and July 9th low, but I'm taking it one step further by fractalizing my trade and going on to the lower time frames to find a trade setup that aligns with that higher time frame draw. So yeah, just key points is that I am selling above the 10:30 open. I noticed that consequent encroachment, respecting the consequent encroachment, and the higher time frame draws is the same as the lower time frame draw. So external liquidity aligns with internal liquidity. Internal is basically lower time frame. Here, what I'm expecting coming into tomorrow is that if we do close like this on the daily time frame, what are we going to anticipate, right? I can anticipate for us to continue lower and attack previous day low, and possibly attack July 4th low as well. So we rebalanced this FEG right here already. I want to see us rebalance this FEG as well. So like I said, it depends on how we close today. We still have about an hour left of trading, but I am gonna anticipate for us to take out previous day low and hopefully see lower prices and maybe, you know, come into previous week's high or previous 2 weeks prior high. There is a trade setup that I am looking at right now. It is this setup right here actually. So notice how on this 1 hour time frame, if we close right here right now, what can we anticipate for prices to do? I can anticipate for prices to take out this candle's high, but on the 15-minute time frame, I'm also anticipating for us to take out this 15-minute high. And oh, that's a 30-minute, I believe. Oh no, that's a 15-minute. So on the 30-minute time frame, we also have the same objective too, which is to take out that 30-minute high. And okay, so never mind, we just took that out. So my trade idea is invalid, or not invalid, but it's scratched because the objective has already been taken. But yeah, that's not that's all I have for CPI today. I wasn't at the charts during the CPI release at the first initial or at the when we took out previous day high, but I got on live stream around like 9:30 something. I was a little bit late because I just got back from thrifting in the morning, and yeah, and I'm probably gonna wrap up today's recap here. CPI day trading, you know, tough week. It was a tougher week, Monday, Tuesday, and Wednesday, but today CPI day actually was, you know, pretty solid price action. Whenever we respect fair value gaps, that's when you know there's favorable, you know, that's when you know it's like prices are favorable. Yeah, and with that, I'll conclude the video, and I'll catch you guys later on the next one. Peace out.